The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, for the most part, we saw pressure across commodities on the day Tuesday, with crude oil down another 3 to 4%, wheat leading the charge to the downside in grains and oil seeds, mixed trade to lower in cattle and hogs. What do we make of all of this that is going on as we work through this week? Let's talk about it. Joining us now for market analysis, Tyler Schao with agmarket.net. Tyler, it's good to talk with you again, my friend. Hope all is well.
Yeah, it's always good to visit with you, Jesse.
Got to ask you, I know folks across North Dakota had a lot of trouble with the severe weather over the weekend and a lot of damage to farm buildings and loss of life and more. What have you heard from folks around you, and how are things in your neck of the woods, Tyler?
You know, in our neck of the woods, we were okay. We did have some pretty heavy winds. You don't got to go very far south of us, just about 3 miles. We had some friends with some damage to buildings and property. I had some other neighbors had a lot of damage to buildings. As far as crop damage goes, I think the crop's a little too young and immature right now to really see a lot of damage to that crop really across the state. As you move east, where the derecho kind of formed, you've probably seen on social media a lot of grain bins collapsed. There was a lot of rail cars that got flipped over. And as you mentioned, there were 3 people that passed away in Enderlin, North Dakota. So our prayers out to them and their families as they deal with that tragic loss. So, luckily where we're at, we escaped it relatively harm-free. So we're thankful for that.
Well, we will definitely be thinking of those folks that lost their lives, and we'll be watching the cleanup across the northern plains. And I know on top of all that, Tyler, we've had a lot of heat across that crop in the upper Midwest here and Western Corn Belt, but starting to cool things down a little bit as this front and this heat dome moves to the east. But, I think about this, and a lot of times you'd see a big heat dome, it would be a bullish story for these markets, but I think the crops across much of the western half of the Corn Belt needed some of this heat, didn't they?
They did. Really, especially out where we're at, we've lacked a lot of growing degree days. We need some heat units. We've been needing heat units all over the Corn Belt, but a lot of those places where they got the heat there last week, they also got rain with it. So you are correct. There was quite a bit of chatter on social media. I know late last week that, if you would have seen a forecast like this 10, 15 years ago, corn would have been limit up. And maybe that's true, but, it just, the heat was needed, A, and B, in a lot of cases, it was accompanied by thunderstorms that came through. So it just looks like every time you look at the forecast, there's good chances of rain for really the entire growing region, at least enough to not make the market nervous that we've got a major drought story developing.
And that's a great point. It just feels like there is not really anything bullish for these grain markets. And I know in this case, in the case of the corn market, getting through some key support here, closing below it on Tuesday, D's corn 429 at the close. Have to wonder, does that open us up to another leg down potentially, Tyler?
Well, it doesn't, on the D's corn contract is not a good look. Anytime you take out previous lows or previous support, 430 is what a lot of people felt needed to hold. So that's got me a little bit concerned. I'm not going to lie. Now, the one thing I will say is this market, we were talking before we came on air about how these markets have been tough to trade really for the last 6 months. Take a look at soybeans. Multiple times they violated what everyone would have told you was critical support, key support, and all they do is rally off of them. They don't rally high enough to make it profitable. They're still unprofitable to make sales for most producers at the levels they got to. But the markets have not been reacting like we would normally see. So while this is a little bit troublesome for corn, I'm not going to lie, and we've definitely paying attention to where the D's corn is at. The markets have been anything but normal for the last, I would say, 12 months. It feels like at this point.
And you would think, corn would go lower with crude oil, which we can talk more about that in the Middle East here in a minute. But yet it felt like corn got some support from a big sale to Mexico on Tuesday morning. And when you compare corn versus crude or wheat or even soybeans, all in all, I mean, not a bad day Tuesday, just some of those key support levels that we have to pay attention to and really setting up this market, Tyler, as we head into next week's big USDA reports.
Yeah, and one thing you just mentioned made me think about wheat. You look at Chicago, Kansas City wheat really took it on the chin today, down 17 cents in Chicago, 15 cents in Kansas City. Not a good look in the wheat market, been under some pressure. Wheat harvest really picking up in the winter wheat belt. And from what we're hearing on early reports, some pretty big yields really across the doesn't matter if you're in the eastern wheat belt or in the southern plains. We're hearing large yields coming off of those crops. So that pressure definitely did not do corn any favors today. Even as we saw the bearish forecasts and all that other news. You are correct. The exports still look strong. Ethanol has been strong. Demand for corn is not weakening. We just we just keep getting bad news thrown at corn. It seems like every single day, and now we've got some of these technical targets we got to watch out for.
You brought up the wheat complex. Spring wheat didn't fare terribly on Tuesday. A lot of that pressure was focused in Chicago and KC. What's your read on the spring wheat complex right now, Tyler?
Well, the crop conditions report yesterday did have the spring wheat conditions drop. I think it was like 3 points. Market was expecting them to improve a little bit over the last week. So, that's probably what's supporting the spring wheat. Also, Canada's been dry. They did get some rain over the weekend, but it does kind of feel like we're looking at maybe a drier pattern moving forward as we move through the next few months. So I would argue the wheat crop does look good in my backyard. Got to do a little bit of traveling, some rodeos over the weekend. Everywhere I went, it looks pretty good in northwest North Dakota, anyhow. But this is the time frame where we need to, it'd be good to see some additional rainfall. And right now, what we've got is maybe a chance for some severe weather again this Friday. So, maybe we'll get some rains. In a lot of cases, we'll get some good rains out of those. It's usually pretty spotty and not that widespread rain that we'd really like to see.
By and large, as we head into next week's USDA reports, where's your mind at as a trader? And you look at these grain markets, and obviously the June reports are always very influential, very volatile they can be. I mean, what are your thoughts heading into these reports? And to your point earlier, I mean, an abnormal year in the markets right now, Tyler.
Yeah, so in fact, we sent off our estimates for the June acreage report, and Ag Market believes we'll see that corn number come in at like 95.8 million acres. I think in the March planting intentions report, it was 95.3, 95.4, somewhere in there. So we're looking at a half 500,000 acre increase over the March 30th report. We think that'll kind of catch it. There are some chatter, or is some chatter in the market that maybe it's 96 million acres plus. There were some areas where we saw additional corn acres come in, largely up in kind of the northern plains area. But don't forget it was really wet in the south. They were not able to get some of the crop in, so we kind of feel largely a lot of that was offset. The bean acres, we see them coming in slightly lower. Again, that's just when you ran the math and did the economics on it. When it came planting time, it was really hard to pencil out anywhere near break even on soybeans. And so, that's one of the things we're looking at, thinking maybe we'll see a few more corn acres, see a few less bean acres, probably not maybe the sizable amount that some people in the marketplace are looking for on this June 30th. Now, I will say, June 30th, we get two reports. We get the acreage report. We also get the quarterly stocks report. Hard reports to handicap. A lot of times, these are all going to be survey data driven from farmers, at least on the acreage report. Stocks are just always really hard to handicap. That's one of the things John Stewart and Associates have said for many, many years. You want to talk about one that's hard to handicap, it's that one, and it comes down to feed usage. But it is where we'll kind of get some truing up to see, all right, we know exports have been good. We know ethanol demand has been good. What are we missing if there is enough corn and the marketplace isn't worried about being able to find corn to get us to the new crop? That's going to give us our first inkling of maybe we are missing something. Maybe feed usage is lower, or maybe there's just more corn out there. Maybe the USDA missed on their when they lowered yield by almost 4 bushels the acre in the January WASDE report.
Tyler Schau with agmarket.net is our guest analyst here today on Market Talk. I'd love your perspective on the Middle East situation and the impact we're seeing in crude oil, down another 3 to 4% on Tuesday. I know I've said this a few times, a shaky ceasefire agreement, I would say, between Israel and Iran. Very blunt comments from President Trump Tuesday morning that I'll not repeat here, but you can find it pretty easily if you want to hear exactly what he said, if you haven't heard already. But I guess you look at everything going on, we hope there's a de-escalation, and it seems that a lot of algos maybe and traders have taken a fair amount of that risk premium out of this crude oil complex. What do you think, Tyler?
Well, I think crude oil is $14 lower than the open Sunday night. It's a massive reversal. I mean, it doesn't take too much of a technical charting genius to figure out you call that a key reversal yesterday, where you come in and slam in some highs and then sell off throughout the day and take out the previous day's lows. That's creating pressure and shock waves across a lot of markets. We believe that the tricky part, though, is crude oil had a nice run there the week prior, during the escalation of the Israel-Iran conflict, and corn really seemed to negate it. And now we've reversed on the crude oil, and corn is just kind of not paying attention again. So I don't know that corn, really the grains in general really care about geopolitical risks right at the moment. It feels like they're no longer a risk asset like they were in 21, 22, and early 2023.
That's a great point. I'm glad you brought that up, because it just seems like the seasonals have been thrown out the window in the grains, the headline news, and more. To your point, it just feels like really across the board, we're not paying attention to any of this in the commodity space. Even so, in the livestock trade too, I think livestock's more tied to the stock market than anything. But it's just something that we talk about it, we watch it, all this volatility in crude, gold sharply lower Tuesday, yet again, just not really any impact in the commodity trade, Tyler.
No, there isn't. And like I said, and one of the things that I've been kind of vocal about, I guess, when I get to do some of these interviews, is I think one of the things we learned in the Russia-Ukraine conflict, where we saw wheat and corn really escalate in price during that war, was grain found its way to where it needed to get to. That was always the concern, is there would be some type of escalation in the war, the geopolitics would kick off, and all of a sudden grain would get trapped where it was and wouldn't get to where it needed to be. And I think the lesson from that everyone's kind of maybe not paid too much attention to, but grain still got to where it needed to go. Grain merchandiser's been around a long time. It's one of the oldest occupations there is. I don't think it's going anywhere, not going to get replaced by machines, and merchandisers figure out how to get the product where it is to where it needs to go, and they do it relatively quickly. And so I think that's one of the lessons, in my opinion, that we learned from that conflict on the grain trading side of it is we really don't bottleneck it as much as we anticipate. And so I just don't think the market, I want to say it doesn't care. But the other thought that comes to mind is as the world has become a better producer of grain, there's more pockets of it located all around the world. So if tensions rise one place, we can move logistics around and supply the need from a different location. We can do it relatively quickly in these in the world today.
Let's go over to the livestock trade. Cattle futures, kind of interesting day there. We started higher. Looked like we had support from the stock market, and then finish up the day mixed on Tuesday. I know we had lower cash a little bit last week. what's your read on the cattle complex right now, Tyler?
Kind of the same as in the grain. One of our fellow brokers mentioned in one of our chats here a little bit ago, man, a 5-day trade or $5 trading range in feeder cattle, and no one's even asked what's going on. Just kind of become the norm of the feeder calf market. We're up $2. You look 15, 20 minutes later, and we're down $1. And that's number one, a $5 trading range on a $300 feeder calf contract, percentage wise, not a real big move for the day, right? It does feel like we pay quite a bit of attention to the feeder calf cash markets. It does feel like maybe they got a little toppy. It does feel like the fat cattle market got a little toppy there over the last week. I'm not going to tell anyone the highs are in. I've been around long enough to know that's a bad comment to make until you know for certain. But it does feel like if you have weathered this storm so far and have not done any type of hedging, maybe now isn't the worst time to look at some type of option strategy, LRP, something to lock in calves or fat cattle that you got on feed. Well, you got a pretty good pricing opportunity there.
It was Tuesday trade, and we've seen this the last several Tuesdays where funds liquidated some positions in this cattle complex. So that makes me wonder if that was maybe some of what was at play as well on the future side Tuesday. Yeah,
they get instructed to liquidate positions or add positions without letting the market know. So there's some strategic moves that they make that they try to drive the price one way or the other in order to exit a position. And so I'm sure there's some of that. Plus, this is Tuesday, this is commitment of traders reporting day. So we'll get that data on Friday. So I wouldn't be surprised there wasn't some of that going on.
And I know too, this whole cash situation and just summer demand, for grilling season, that's been widely talked about. You rope in the hog complex too, which had a bit of a correction day Tuesday after setting some new highs Monday, and thinking about consumer demand and meat demand at the grocery store. That's something that, we continue to track that for signs that maybe we're getting toppy across this protein complex. And I'd say there's been a few brief signs out there as of late, but nothing super concrete, I guess, is how I would put it, Tyler.
No, and I have not looked at boxed beef prices today. They have remained strong though through all of this, and you kind of alluded to, the consumer is still engaged and they're still buying beef, and doesn't seem like they want to back off. So, and that's the one thing that I will say will continue to provide support as long as the consumer is opening up their wallet and paying for the beef. Or the animal proteins, it should keep this thing well supported with the low supply numbers we're looking at.
Tyler, always enjoyed the conversation as we wrap it up today. Anything final you'd mention or reiterate to folks on the show?
No, I just, I would be visiting with your marketer, your broker, whomever it is that you utilize. Come up with a plan. I know it's hard to come up with a plan, especially in grain markets like this, where it just seems like every day gets beat up. Probably had some targets, didn't get filled over the last few weeks, and now you're wondering what to do. Don't forget, it's the end of June. We've really not had a weather market in the grains at all, so to speak. If one of those fire up, the market could do some pretty. Could make some moves relatively quickly, but don't ever forget, supply side rallies are usually pretty limited and run out of fuel pretty quick. So if we do get a pop in the grain markets, be willing to make sales and get some sales on the books and start making the next plan.
Tyler, if folks want to reach out to you and the crew there at agmarket.net to talk about that and have a conversation, I know the best way to get started is going onto the website, right, Tyler?
Yeah, check us out, agmarket.net. Look us up, see if there's a broker in your area.
Fantastic. As always, Tyler Schao, agmarket.net. Good to have you with us on Market Talk. Have a great week. We'll talk to you again soon.
You bet. Take care, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.